Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Another day up on Wall Street. The big question is, after yesterday's big rally, 300-point rally on the Nifty, is there more and is there an all-time high? Once again, very, very close by. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, morning Nigel, morning Prashant, and yes, indeed, we were counting down, right? We came some 70 points away from that sort of mark, but actually it was a very great trading session yesterday. It was so well-rounded, and we got fairly decent cues this morning as well. So, is today the day?
Well, today's the day. You know, from all through November, I've been saying that, and then I was getting a little nervous because we're running out of days in November, but we have got 2 to go in this month in terms of trading days. And today's the day. It's a fresh all-time high. Prashant's dressed appropriately, as I can see.
Happy in pink.
Yeah.
I'm neutral in white.
I think flash chala dete hain. All-time high.
Market's all set to hit fresh all-time highs.
No, hits all-time high. Okay, anyway, let's just take it from the top, right? In terms of what you need to know as we begin a new trading session. US continues its repair and recovery. Nifty once again eyes new all-time highs. I mean, we got to about 25 points. We got closer earlier than we got yesterday. The high is 26,277. It was hit late September. 27th of September is when we hit that. And then, of course, we know what happened, right? There was the US presidential election. The results came in sometime in November. The swearing in was in January. There were tariffs. There was a big sell-off into Liberation Day, which is in April. The market made a low. And then from the Liberation Day lows in April, the market's basically been coming up. And we are now about 60, 70 points away. Now, US, right, and equities rallied once again. And there is, of course, rising expectation of interest rate cuts. And it was 40-60, 50-50. Now I think there's more who are expecting a cut than those who are not. S&P 0.7% higher. The Nasdaq about 0.8%. Wix was down 7.5% last night. So this is actually pretty good overall. And this also, of course, putting to rest some nerves around the AI trade in the US. Dell, for example, I mean, just to talk about AI, was up. It reported numbers the prior day after close, but 6% last night. It said it's received a record number of orders for its AI servers. So that's one more name rallying on the back of this AI thing, right? Oil prices 1% higher, 63, but Brent oil prices are down 4% in the last 1 week. And the big global geopolitical story, of course, is likely to be, I mean, if we actually come to it, there's always room for a slip between the cup and the lip. But the point is, markets are reassessing the prospect of a potential Russia-Ukraine peace deal. And we'll see if that actually does happen. It looks like we are very close. But we've been close before, maybe not this close, but we'll see. And, we're going into the weekend over the next couple of days. I mean, one more day to go. Will we hear something as we come back? Jobless claims data fell 6,000 to 216,000. Consensus was 225. It's the lowest since the mid of April. I don't think this is a number that you'd quarrel with. U.S. cash markets are closed for Thanksgiving tonight. I think futures will trade up to a certain point, but the big cash market is closed, so that is not there. GIFT Nifty will come up on your screen, gives you a quick sense. I'm not putting out, I mean, the 20-day remains a support. And with yesterday's move, you've put enough distance, so I don't think you need to worry about that today on both the Nifty and the Nifty Bank, which has been the trailing stop loss, as we've been indicating. We came very close, and you hit the almost hit the 20-day day before yesterday, and then yesterday we had this big bounce. So maybe we should look up rather than down, at least for today's session with the overnight handover as well. 50 points higher on the GIFT Nifty, and of course the question is, a new all-time high today, 70 points away. Nigel is standing by with what the F&O stats looking like. And it's going to be interesting to understand what happened yesterday. There was that big Bharti block deal influencing the FI cash figure. But what else in terms of the F&O side? Nigel, take it away.
Well, that's right. The cash market trends are going to be important from here on. But as you said, yesterday's number was skewed because of that large trade. Though it's good to see at least the FIs, they're not selling, anywhere close to as aggressively as we saw a couple of months or so. But today's the day. And after 14 months, the Nifty is all set to revisit the fresh all-time highs. That's the number you're looking at on the screen, and we're 70 points away. I think in the first few minutes itself, we go to those fresh all-time highs. So today's the day, always a good feeling, right? And the global backdrop is very, very good because the US markets will be shut today. Tomorrow, they're open only for half a trading session. So no scare could come overnight, so to say. And the troika as well behaved. Dollar index has cooled off from around 100.5. Just the past week, it sat around 99.5. Brent crude prices at very, very subdued levels. And now the street is bracing for that rate cut. 85% probability going by the Fed funds tracker out there. So that rate cut from the Fed, that's expected. What did the FIs do on index futures? Well, yesterday's trading session, they covered very, very mild shorts on index futures. They added some longs as well, though we continue to remain net short at close to around 83% of the positioning on the short side. In absolute terms, the FIs are net short with close to around 90,000 contracts on the short side, while the clients are net long. So both of them, the FIs are not as short as what they were, say, a few trading sessions ago, and the clients not as net long as what they were. But this combination is normally good, with the FIs being net short in the system. Gives you a reason to expect a bit of a short covering bounce. What about the PCR? Well, the PCR has moved towards the upper end of the range. Normally at around 1.6 is where you see the markets cool off a little bit because that's telling you that put writing is becoming very, very easy. So from around 1, it's bounced up to around 1.45. And the FIs as well did write a fair number of puts in yesterday's trading session. And that perfectly ties in with the kind of action that you're seeing. 26,000 put, 26,100 put. Between them, close to around 2 crore shares added there. And the premiums crashed out there, which tells you that the markets are bracing for higher levels now. And that 25,500, 25,800, that's the crucial support zone, which incidentally is where the 20 as well as the 50 DI comes in at. So bracing for all-time highs, till this range is protected, you'll have to back yourself that we're likely to see higher levels. And the Nifty Bank, that's the one that actually could lead the way because that's been the case. 60,000 is almost out there. 20 DMA, very, very deep, 1,000 points away from here. 60,000 on the cards. But I think the biggest positive yesterday was the breadth of the broader markets and the way that the mid and the small caps did come back. You'll want to see more of the same because the headline index goes to all-time highs, but portfolios will want to feel like we're at all-time highs as well. So let's take it from there.
Absolutely. And, yesterday's cash market buying that Nigel was alluding to, it kind of excited me. But then you have to keep all the blocks in mind as well. So, it's skewing it because if you look at the net numbers and we are still negative for the month of November, that's the only spoiler in the party. Those FPI flows are still missing. They're not coming back in a consistent way. By the way, Asian markets are feeling rather good today. So they're taking over from that positive Wall Street close. And most of the markets are up and about. Very unfortunate events in Hong Kong, of course, this morning with that massive fire. So our thoughts and prayers, and hopefully the rescue teams get it under control. But aside of, that disturbing story, from a market perspective, things are up. Major markets like Japan are up 1.5%. Last I checked, Kospi was higher as well. So no problems there. So we seem all set for a positive open. Let's pull up the implied open, the GIFT Nifty, and see what that is suggesting. Just a matter of time, right? And if we get this 51-point sort of a positive start, then the gap itself is going to take us very, very close to a fresh all-time high. So it seems to be, well, I shouldn't say a given, but seems to be a very high likelihood today. With that, let's move on to the equity call of the morning. JP Morgan says that Indian equities have experienced significant pressure over the past year, driven by a confluence of factors, which is anemic earnings growth, lower beta, and a lack of direct AI exposure. However, JP Morgan's Rajiv Batra now says that with supportive fiscal and monetary policies, recovering domestic demand, and broad-based sectoral growth, corporate earnings are set to rebound. JP Morgan forecasts MSCI India earnings to grow by 13% in calendar year 26 and 14% in calendar year 27. They also raised their Nifty 50 base case target to 30,000 for the end of 2026 and also reiterate their preference for domestics over exporters. So that's a very bullish sounding JP Morgan saying the Nifty is going to 30,000 by the end of the next calendar year.